Inflation is one of the biggest concerns for retirees looking to maintain their purchasing power over time. As the cost of living continues to rise, ensuring your savings are protected against inflation is a must. But how can you do that effectively during retirement? One strategy many are turning to is investing in index funds. In this video, I'm going to show you how to use index funds to hedge against inflation and protect your wealth. You might already know that inflation erodes the value of your money, meaning the same amount of savings will buy you less in the future. This is especially concerning for retirees who depend on their savings to cover living expenses. But there's a solution that's been trusted by smart investors for decades: index funds. Now, I know some of you may already be invested in stocks or bonds, and while those can be good options, index funds offer a unique way to diversify and minimize risk. Unlike picking individual stocks, index funds spread your investment across a large number of companies, tracking the performance of a specific market index like the S&P 500. This broad exposure helps you avoid the ups and downs of any single stock, giving you stability, and that's critical when inflation is on the rise. What makes index funds so effective against inflation? Over time, the companies in these indexes tend to increase their prices to keep up with inflation. For example, large-cap companies in the S&P 500 are well-established businesses with the ability to pass on rising costs to consumers. This helps preserve the value of your investment even when inflation is high. But let's take it a step further. If you're serious about protecting your wealth and you're looking for a way to hedge against inflation in the next 2 weeks, you'll want to click the first link in the description for a free gold IRA guide. Thousands of Americans are opening gold IRAs because they offer a unique opportunity to protect your wealth with a tangible asset that historically performs well during times of inflation. While index funds are great, you should also consider diversifying your portfolio to include other options, especially gold IRAs. Unlike stocks and bonds, gold is considered a safe haven during inflationary periods. Gold has historically held its value better than traditional investments, making it a smart way to protect your savings. If you have $100K or more in your IRA or 401K, or even up to $5 in savings, a gold IRA might be the best option for you to ensure your retirement is secure. But getting back to index funds, the beauty is in their simplicity. They require far less time and effort than picking individual stocks, making them a great option for retirees who want a passive investment strategy. Plus, they're generally low cost, meaning you won't be paying high fees to a fund manager. So, whether you're looking to keep up with inflation or simply build a more robust portfolio, index funds are an excellent tool. But remember, while they are a great way to protect your wealth, combining them with other options like a gold IRA will give you even more security. If you want to learn more about this strategy, click that first link for the free guide and start protecting your wealth today. For those of you with more than $100K in your IRA or 401K, or those with 5M plus in savings, this gold IRA strategy could be your best bet. Gold has been a tried and true hedge against inflation for centuries, and when combined with your other investments, it can create a well-rounded, inflation-resistant retirement plan. So, make sure you're not relying solely on traditional investments. Index funds are a great place to start, but if you want to really hedge against inflation during retirement, it's worth exploring a gold IRA. And for those of you who are serious about your retirement security, don't miss out on the free guide in the description. Your future self will thank you.